AI broadly led by machine learning and deep learning techniques. But 2023 has brought in front of us the power of LLMs, chat GPTs and its comparative, tools. But having said that, it's very, very early days as far as, deploying these technologies to trigger, market action.
Hi, all. Welcome to Decimal Point Analytics Unplugged, where we explore the latest advancements in technology and their impact on various industries. I am your host, Supriya Praveen. Today, we have a very special guest with us, Gaurav Gupta, Managing Partner at Decimal Point Analytics. He'll be sharing insights on DPA's recent article on key trends for asset managers in 2024. Gaurav, it's great to have you on the show. Welcome back.
Great to be here, Supriya. Thank you for having me. And I'm really looking forward to today's conversation on global asset management companies and some of the topics that we covered, especially the trends.
We're excited too. Let's get started with our first question. How can asset managers adapt their investment strategy to navigate the shift from ultra low interest rates to a more normalized rate environment, considering the persistent inflationary pressures?
So yeah, that's actually a very interesting scenario for specifically investment managers because we've come at the back of a very long sustained low interest rate regime, and that's why it has the sudden increase in interest rates has really applied a lot of pressure on asset values across the world, across asset classes. But more than the fact that it is no longer going to be a low interest rate environment, what I would call it is it's going to be a variable interest rate environment, which means that interest rates will start moving up and down a little bit more actively than what we've seen in the past. Okay, and what happens is in such scenarios, benchmarks which usually used to create and provide a very large part of the returns by equity managers will no longer be offering those returns. In fact, what it puts the equity managers is in a position to display their stock selection, their tactical allocation in a way that they can deliver alpha over beta. And I think that is going to be the opportunity for the equity managers going forward. So that is as far as the equities is concerned. Obviously, there are then the other alternative asset classes which have come into play. Specifically, you may call it private credit, private markets in terms of private equity, real estate. So all these asset classes are there, and of course, who can forget the frontier markets of digital assets? So all these options are there for investors to really provide some allocation and increase their returns and have a diversified set of portfolio.
Very interesting. Moving on to our next question. As ESG factors become increasingly important, how do you see asset managers integrating these considerations into their core investment processes?
So, ESG again has been a very, very strong trend over the past few years. It is not for me to judge its true utility. It's too early, but clearly there are geopolitical headwinds against deploying let's say ESG led practices in a very strong way. But regardless of how you look at it, one thing you cannot ignore is that ESG is here to stay. And what ESG most managers are really doing is to create an additional layer of, let's say, risk management analysis of the various stocks and portfolio positions that they have, in their approach towards investment. So they are looking at you know in varying level of, let's say, depth and details, but everybody has started to look at it. Is what are the ESG-led risk parameters for some of their stocks in their portfolio? And I think that is a great start for ESG as far as the overall objectives are concerned.
That's a very compelling point. With the rapid evolution of AI in asset management, how can firms effectively leverage AI's analytical capabilities to generate alpha and gain a competitive edge?
So yeah, I think there are very exciting things happening as far as the technology is concerned. I mean, earlier a lot of people were talking about AI broadly led by machine learning and deep learning techniques. But 2023 has brought in front of us the power of LLMs, chat GPTs and its comparative, tools. But having said that, it's very, very early days as far as, deploying these technologies to trigger market action. I mean, our obviously Decimal Point has been working, and our experience has been that it's it's still important to have a human in the loop. That's what we tell our clients. So when we are deploying, AI-led or LLM-led, let's say processes within, there is a kind of a layer of oversight because the technology is still evolving. I think a lot of exciting things could come out of it. But on a standalone basis, it would not be right to expect these technologies to deliver alpha yet. But it is making things a lot more efficient. It is allowing the investment managers to have a lot of information summarized in a moment's notice. So it is helping them encompass a lot of market developments very, very quickly and putting it literally on their fingertips. So those efficiency gains have come in, but how it sort of goes further and delivers an alpha is still very much in the hands of portfolio managers, their own skills, etc. So yeah.
Yeah, that's a good insight on this. I get first-hand learning when I host these podcasts, so it's pretty interesting. Moving on to institutional investors warming up to digital assets, how do you anticipate this increased exposure through EFTs, asset allocations by hedge funds, and direct investments by tech giants, impacting the overall stability and growth of the digital asset market?
Yes, I think digital assets markets and their underlying technologies is another, hugely exciting arena for people in the space of data and investment management, etc. And it's also interesting to see, a lot of institutional players, taking their initial steps into getting exposure to digital assets, either through ETFs or through, maybe even direct. A lot of, these institutional investors are actually something that people don't get to see is they're investing in companies, new businesses, startups which are developing these technologies and making a play in cryptocurrencies or NFTs and other forms of digital assets. So yeah, I think this is a great sort of development and I think to some extent even government agencies are wanting to look at the positive side of these technologies and the transparency that comes with it, the efficiency of transactions, and And at some point, I'm hopefully the minimizing of the bid and offer spreads, which right now is still very high. It's still illiquid. Uh, but yeah, I think the presence of institutional players is an increasing presence is going to make a lot of difference to this market.
Coming to regulatory, the attention on the crypto space, how do you envision asset managers navigating the balance between complying with stricter regulations like KYC, AML procedures, licensing requirements, and fostering innovation in this rapidly evolving sector?
So I don't think so. It's a very good, very important point you brought up actually, because this is an emerging market. It's literally a frontier market, and frontier market is typically represented with a lot of volatility, and so in that sense, it's important for the investors, especially the non-institutional investors, to be protected, and the onus would come onto the investment managers, which are packaging these digital assets and raising capital from it. So it's important to do the basic level of KYC, ensuring that the risk bearing capabilities of these investors match with the kind of exposure they're taking through the digital assets. So I don't necessarily see the requirement of KYCs or insisted by the regulatory authorities as something that is coming in the way of innovation. It is, I think, a very important feature to make sure that investors who come in are aware of the risk and therefore stay longer rather than losing a lot of money and then never coming back into that market. So I think in that sense, I totally support an important a well strong KYC effort to ensure that the investment matches with the investor's risk profile.
Yes, absolutely. This is very important, and it in long term it helps the investors with mitigating their risks. So here is the last question for today's podcast. In what ways asset managers can derive value from Decimal's diverse offerings, and how does this contribute to enhancing their decision-making capabilities in this ever evolving landscape of asset management?
Sure. I think I think Decimal Point Analytics has been working with its customers in the asset management industry now almost 2 decades, and all through this long journey of partnership, Decimal Point has always brought in the best and the latest technology to solve problems for our customers. And I think in terms of Decimal Point, area of support is predominantly helping clients manage with their data processes, whether it's structured or unstructured processes, right from the point of getting access to that data to, data governance, data infrastructure, extracting insights from the data, or even conducting, all the advanced analytics using AI, ML, LLM-based algorithms. So I think the way Decimal Point really would help, especially in the more, let's say, advanced technology-based analytical techniques, is to work along with them and see which is the most practical and efficient application of these technologies to solve the problems in a manner which achieves their objectives, whether it is to improve their product or whether it is to help them increase their revenue bearing capabilities or increase their margins. So that has been our focus. We've delivered that successfully for so many years, and we continue to look forward to working with our clients in the space going forward.
Thank you for sharing those valuable insights. As we come to the end of the podcast, thank you, listeners, for tuning in to Decimal Point Analytics Unplugged. We hope you found the discussion informative and engaging. Do check out the article, link is provided below. Stay tuned for our next episode, where we'll continue to explore the latest advancements in technology and their impact on various industries. Until then, thank you. This is Supriya signing off.